The bill itself is unobjectionable. It finally implements Recommendation 210 of the Banking Royal Commission, recommending a single disciplinary body be established for financial advisors. And I say finally because this recommendation is now 3 years old. It's taken the government that long to get the legislation here. And there's great concern that the government's not actually serious about implementing the Royal Commission's recommendations. Their heart was never in the Royal Commission. 26 times in this parliament, Labor attempted to get the government to back our calls for the Royal Commission. 26 times the government said no. The Prime Minister, the now Prime Minister, told us that it was a stunt, that it was going to be just hot air, that it would undermine confidence in the financial system. Apparently, so the Liberal Party thought, it was better to let the rorts, scandals and dodgy schemes that the banks were pushing onto their customers just continue, leaving the winner-takes-all culture humming along. Let Australians continue to be ripped off blind by sales agents, masquerading as advisors, reaping huge commissions, having their lives wrecked. Eventually, of course, Labor prevailed. A couple in the coalition weakened and forced the Prime Minister's hand, and the Royal Commission was exactly what the banking sector needed. As the Shadow Minister has said previously, there's nothing like a Royal Commission. It's a unique form of inquiry. It's a form of truth-telling, unlike anything else. And at the heart of Commissioner Haynes' report, underlying nearly every instance of misconduct, lay the pursuit of personal profit or gain, rewarded through a system of bonuses and incentives. So that was the system the Liberal Party fought so hard year after year to protect. So you can excuse Australians and members on this side for being a little sceptical about the government's genuineness in implementing the Royal Commission's recommendations. Indeed, the government has never actually committed to implement the recommendations. They used tricky words. All they said was, "We'll act on them." Well, it's not the same thing. The shape-shifting Prime Minister cannot be trusted when he used tricky words like that. And our concerns have been well-founded. We've seen 3 years on, ongoing delays in actually bringing legislation here, the rejection of core recommendations, a weakening of parliamentary oversight, the House Economics Committee now being misused, the chair running an interference racket to prevent the bank CEOs accounting for the recommendations, instead wasting the committee's time pursuing ideological frolics against superannuation funds, and backflips like the recommendation 1.1, the responsible lending obligations, which this House has debated. I do have hopes for the Parliamentary Joint Committee of Financial Services. I won't tell anyone, Deputy Speaker, but I think the chair's doing a good job. Might wreck his reputation if people heard that. But excuse my scepticism with anything the government serves up. The bill also winds up the Financial Advisor and Ethics Authority transferring the power to set professional standards for financial advice to the Minister. Now that sounds interesting, it sounds okay, doesn't it? Except it's the most stunning admission of failure. The government actually established this authority only 3 years ago, and since then it was characterised by a litany of stuff-ups and mistakes. 3 chief executive officers in just 18 months. That's got to be a clue it's not going well, but still, on it rolled. Standards were released for financial advisors just days before they were supposed to take effect, causing chaos in the sector. People literally saying, well, I can't continue to operate. Now, it's difficult to fully judge this bill because there's been no draft regulations published or provided. And it is important to scrutinise the regulations then when they are published to ensure they're sensible and that they protect consumer interests, that the government doesn't use them, the minister's newfound power she's gaining from this bill, to just further water down consumer protections and go back to the bad old days. It's important also that the government listen to consumer advocate choice and make sure that on the disciplinary panel that there's a consumer representative appointed. It's not in the legislation, but the government has the power to do the right thing, and we'd expect they use it. But this bill, of course, comes in the context of an appalling failure in 8 long years of this government now on financial reforms. It was under the previous Labor government that your predecessor, Deputy Speaker, as Chair of the Financial Services Committee, Bernie Ripoll, identified the need to improve standards in the financial advice industry. I think that's a great example of how a committee like that can use its power to delve into a really big problem, shine light on it and propose groundbreaking reforms. The government, though, this government has bungled the implementation monumentally. If there was an Olympics for implementation failure, then financial advice, I don't actually think it'd be a medal contender, I have to say, when you rank it up there against vaccine rollouts and quarantine and things that have literally cost people's lives and tens of billions of dollars, but it'd certainly make the final. It took the Abbott-Turnbull-Morrison government 6 years to even decide to legislate for this authority, and 11 years later to close it down. But between the government's messed-up implementation of the future of financial advice reforms and this latest implementation of failure, their own failure, they actually can't blame anyone else for this mess but themselves. In the setting and policing of standards, the industry is in turmoil. I'll just make a few remarks about that as the second reading amendment touches on. The financial advice sector is in serious crisis. Now, the Royal Commission shone light on and smashed up the old broken business model, dressing up sales and commissions as financial advice. Rightly so, it's destroyed that model, given what was revealed, the inherent conflict between trying to act in a customer's best interests while receiving huge secret commissions yourself and not telling them about it, and the harm that was done from that. But we've now moved on, if you like, from a conduct crisis to a supply crisis of financial advisors and therefore an access to advice crisis. We've gone from the conduct crisis to a supply and advice crisis. And quite simply what this means, as even many of the government speakers to their credit have acknowledged, although somehow trying to make it our fault, they're the government, they often forget that, even as government speakers have acknowledged, everyday Australians increasingly cannot afford financial advice. Financial advice has fast become something that only the wealthy can afford, and people have never had more need for decent financial advice. We're experiencing the first recession for 30 years, which is at serious risk of being a double-dip recession. This quarter is going to be negative growth, even the Treasurer acknowledges. And small businesses and sole traders are particularly vulnerable, as many of them are struggling to trade through this crisis. And of course, for many sole traders in particular, their personal finances are inextricably bound up with their business finances. They need to be able to access decent financial advice in an affordable way. And people also in this country are now retiring with more money than ever before in the history of our nation, thanks to Labor's superannuation reforms decades ago. Super, of course, is attacked mercilessly by the government. You've got half the backbench waging mad culture wars, ignoring the Royal Commission's finding, which actually smashed up retail super run by their mates in the banks and found industry super overall has been performing well. Don't let the facts get in the way of a good culture war for the government. But despite this, when we have greater need for financial advice by everyday Australians, it's never been harder to get. Now, the spotlight of the Royal Commission's report and the consequent reforms, the monumental mishandling of the Ethics Authority, which we're now dealing with the fallout, the accreditation process, fees jumping by 180% in just 2 years, also an ageing workforce, all of these things combined, the government's mismanagement, have driven an exodus of financial advisors from the industry. The government has treated this profession appallingly, as the Shadow Minister well outlined in his speech earlier today. Through their sheer incompetence, they've ignored and harmed what actually they've always claimed as part of their own Liberal Party constituency. I mean, if that's how they treat their friends, more than 4,000 experienced advisors have left the sector in just under 3 years. About 50% of advisors have gone, many estimates suggest, with projections that more are yet to leave in the near future. And so that gap means, with a smaller pool of advisors and a higher demand for financial advice, that people, everyday Australians, are simply being priced out of the market or left to TikTok influencers, as we heard in a recent public hearing. Even ASIC, the corporate regulator, is now concerned about the rise of social media financial influencers. You can just go and kind of get advice on the internet, on Facebook and TikTok from people. Now, the minister doesn't think this is a problem. She said, it's no different for chatting to someone at the pub or a cab driver. Except, as ASIC pointed out, they are concerned because these influencers on social media are taking kickback commissions. So the bad old days are reappearing on social media. That's what the government is leaving everyday Australians to actually find their financial advice. It's completely unacceptable. And addressing this crisis is urgent. It needs serious work from the government to engage with industry and the regulators and work out how to close this advice gap, because all Australians, not just the wealthy, should be able to access quality financial advice about their retirements, their investment strategies and their insurance. Now, that point on insurance is important. I'll just make a couple of brief remarks on that. One of the consequences of the decimation of the financial advice sector appears to be the looming problem in the life insurance industry. Financial advisors are a key distribution channel, of course, for life insurance companies, helping clients to access not just life-death insurance, but TPD insurance and income protection insurance. Often they provide better policies or will point people to more appropriate policies than the default ones through the superannuation funds, which certainly have their place, but aren't based on an assessment of someone's individual circumstances. And I know the importance of life insurance firsthand. My dad died when I was 4, and frankly we were only able to keep the house because Dad had life insurance so Mum could pay off the house. Didn't have much else after that, but it was only because of that foresight, the conservative approach of having life insurance to protect your family. But without financial advisors pointing people towards appropriate products, I stress we do have a greater coverage now because of superannuation, but without the role of financial advisors pointing people there, we may see further problems emerge. And I note the Royal Commission's recommendation that a conservative approach not to decouple commissions from the sale of life insurance, but recommending a further review, which I think the government has just kicked off. I think the Royal Commission was right to be cautious, and I hope the process will be robust and carefully test the claim that commissions should be retained in this area. The default question should be for the sector to try and prove why they shouldn't be abolished, but I do acknowledge there are different arguments in the case of life insurance, perhaps to financial insurance. That needs to be tested carefully through the process and a conclusion reached. I'm not expressing a view. I see the government whip shaking his head. I'm not expressing a view. I'm acknowledging the point, just to be clear there. But not all the solutions to the crisis of advice may be found in the private sector. If we're thinking about how particularly very lower income people can access financial advice, there needs to be a role for government or not-for-profits in providing at least financial literacy programs, as happen in other countries. That's in some places the best way to access financial advice for people who can't afford to pay but do need that basic information so they can make informed and sensible choices about their savings and finances. But the problem remains that impartial and affordable retirement income advice should be able to be available to all Australians, including low and middle income earners with modest savings. In doing that, making whatever changes are necessary, we can't go back to the bad old days. Sales have to remain decoupled from the provision of advice. That inherent conflict is gone. But serious reflection and changes are needed. Now, the bulk of the answer, though, does lie in the private sector, in the professional advisory sector. We need to think how to rebuild this sector and support it to adapt. Labor has raised some sensible suggestions. We've called for the reform of the ASIC funding model, and we've called for greater recognition of specialisations in the education and examination standards in financial advice. Practical things. As the Shadow Minister also said, 100-page statements are not always the best consumer protection, and they're creating a whole lot of red tape, which I think everyone acknowledges. But red tape is very different from having guardrails and basic consumer protection. So these are issues which the government needs to look at, and indeed perhaps the parliament, as in years past, could play a useful role in that. Certainly we seem to have, under your chairmanship, Deputy Speaker, moved away so far from the sort of ideological frolics on litigation funding and superannuation. So, the early signs bode well. Perhaps we maybe could use that committee to have a look at these more serious issues in a bipartisan way. So I'm hopeful the government will act, though if history is any guide, I'm not optimistic the government will rise to the challenge, because for 8 long years they've failed this sector, and ordinary Australians are now living with the consequences. The wealthy are doing fine, but it's everyday Australians who now can't get advice. They mucked around for years and did nothing. They fought against the Royal Commission and are now implementing its recommendations in a half-hearted way. They built the authority that we're now abolishing, they built 3 years ago from the ground up, giving it the wrong direction and the wrong leadership. And now they admit their failure in this bill, which abolishes their own creation. So time will tell if they can learn from their mistakes and deal with the crisis in the financial advice sector. But despite the criticisms, I hope you've heard from many of the opposition speakers a genuine acknowledgement of the seriousness of the problem and a desire to try and work and support the government where they come up with good suggestions to reform the sector. Thank you, Deputy Speaker.